So hi everyone, today I'm going to talk about the confluences on trading. So confluences are very important when it comes to trading because it helps guide your decision before you press that buy or sell. So walk with me and let's get into it so that you're able to understand the three major confluences when taking your trades. So the first one is rejection wicks and candle closes inside a zone. So anytime we have price getting into a major either supply or a demand area, we will have to look out for these rejection wicks. These are what are known as rejection wicks with candle closes inside the zone. That helps in determining whether we will actually see a potential reversal from that level. And as you can see on multiple occasions, each time we see the rejection wick with candle closes inside the zone, you see very strong pushes. Like here we saw a strong push to the downside. Here we see a push to the upside. So take note of that. Rejection wicks with candle closes inside the zone. Now confluence number 2, we have our engulfing candles. Now these are very important to mark. Very important because now this helps us to understand the strength of the reversal that we are working with. Now again, for example, with what you have here. Here you have a bearish engulfing candle here. This is a bearish engulfing candle here. This is a bullish engulfing candle here. This helps in showing us that we are actually now, this helps us in showing us that we are actually now about to reverse. The strength of that candle, the size of that candle, the bullish or a bearish engulfing in this scenario, helps us to determine that we are about to reverse. Because when reversals happen, if now we were in a bullish, trend, like now if we're in a bullish trend, then price gets to a supply area and forms a bearish engulfing candle, then now that shows that we are now having more sellers coming into the market. And the vice versa is true. If price was in a bearish trend, then gets into a demand level, then we see price now form that rejection wick, candle close inside the zone. Then the next action that forms is this bullish engulfing candle with a candle close above the zone. Then that shows that now the sellers are now getting out of the market. It is now that the buyers that are coming in strongly into the market. Then the third thing, as a very crucial point, is ranges. So being able to identify that a range has been filled is very important because now it helps you to be able to determine either one, if you are having a reversal, or two, you're having a continuation of the prevailing trend. For example, a range formed from the origin of one price move going all the way to probably this supply and price coming back to the origin of that move, then that is when you say the range has been filled. So if price gets to a level like this, then you see now a rejection wick with candle closure inside the zone, then a bearish engulfing and a strong push to the downside, then you will be expecting to see price come back to the origin of that rally, which is this level here. So once price has pushed to this level and has come back to the origin of that rally, we say that that range has been filled. So when price comes to this area where the range has been filled, now you're expecting either two scenarios, either a potential reversal or a potential break and the continuation of the prevailing trend. And a scenario like this, usually most times usually see price pushing, either reversing. We see price pushing to the upside in terms of a demand, or we see price pushing to the downside in terms of a supply to signal potential reversal. However, there are instances where price eventually gets to break this level, and now we see a formation of a new range. So those are the major confluences that you get to use in terms of trading. To be able to learn these and understand it better, and also learn how to use it in your day-to-day trading, feel free to join us every Monday to Thursday from 10 a.m. to 11 a.m. for our live on market analysis session. So cheers and see you there. Thank you.